We're here with Bill Lovett, President and Chief Operating Officer of Case Foods at the National Chicken Council annual meeting in Washington, D.C. Bill just moderated an executives panel which took up issues concerning opportunities and the outlook for the chicken industry headed into 2011. Bill, what's your outlook for the U.S. economy in 2011, and what's the likely impact on the poultry industry? And just kind of a follow-up to that, how can the industry respond in terms of production levels and product mix?
Thank you, Gary. It's a great question. I think the economy, or the state of the economy, is probably on the minds of every citizen in our country right now, whether it's relative to elections, whether it's relative to our unemployment rate, or whether it's relative to creating jobs or the condition of all our businesses. I know in the chicken industry, the economy is really a big driver of demand for our product. Consumer spending represents so much of our demand, like any product that is produced. When we have almost 10% of the people who want to be unemployed in this country, when we have discretionary consumer spending at a relatively low point, then that just doesn't provide us with the kick in demand for our product, at least domestically. On the bright side, the weakening of the dollar that's occurred over the last 2 years has in fact helped us on the export side. And typically exports are something around 20% of our business. Even though we've gone through some challenges this past year with a couple of our biggest markets having had trade disruptions, the weakening dollar has had an overall positive effect for our export business. But I think we're going to have to get unemployment rates down. We're going to have to get discretionary consumer spending up, and we're going to have to get our debt levels under control before that we're going to enjoy a real growth in demand.
Well, what are the greatest challenges, in your view, facing the poultry industry over the next few years?
Well, the poultry industry, like any agriculture or animal agriculture business, is always a tough business. It's always been that way, and I don't think that will change. Specifically, the price of our ingredients that we feed our chickens represents, on a finished pound basis, something in the order of 40 to 50% of our total cost. And with government regulation around and tax incentives around ethanol production and alternative fuels that's occurred in the last 5 years, it's definitely had an impact in the economics of our business. It's created a situation where we've had to pay at least double, in some cases triple the amount relative to a few years ago for our feed ingredients. And quite frankly, that has not been all passed, or hardly any of it, for that matter, passed on to the consumer. The delta in that increased cost has really come out of companies' equity over the last 5 years. So that's had a negative financial impact on our business. We would hope and expect that our government would realize that sometimes legislation like that to boost ethanol production does have unintended consequences, and would like for them to recognize that all we're asking for is a fair playing field. Our export markets represent about 20% of the production of U.S. chicken now, and anytime we get markets disrupted, as we have this past year, 2010, from both Russia and China, our two leading markets for export product, it's going to have a financial impact on our business. We're really glad to see that in particular it appears that we have things worked out with the Russians, and that market is open again, which is going to be very good, and I expect that we'll get things worked out with our customers in China and continue to serve them equally as well. And then finally, I think an onerous regulatory environment is bad for any business, and particularly our business. Our business, because we're in so many facets of our economy, from farming to contract growing of chickens and processing, we're a very heavily regulated industry, and we just want a fair playing field with the rest of the world, because we do have to compete all around the globe now. It's a globalized economy, and if we have regulations that render our business non-competitive, then naturally that's going to be a negative impact for us.
Well, thank you very much, Bill.